Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, the focus is on earning steady returns. The federal government savings bond explained. What is federal government savings bond? A savings bond is a government bond or financial instrument used to borrow money for retail investors at a fixed interest rate. The bond is designed to help individuals save while earning a stable return. It is considered one of the safest investments because it is backed by the full faith and credit of the federal government. Like a typical bond, when you buy a savings bond, you're effectively lending your money to the government at a fixed interest rate, with the government responsible for returning the loan in full plus interest. The bond is issued monthly by the Debt Management Office (DMO) on behalf of the government. It is mostly available for 5 days from the date of announcement, and the tenure is 2 and 3 years. The offer for this month opens today, 3rd February 2025, and closes on the 7th of February 2025. The current high interest rates provide a good opportunity to lock in your funds at this rate for the next 2 and 3 years. Hence, any changes in interest rates will not affect your investment return, as we see limited upside in interest rates at this current level. Features all benefits of a savings bond. 1. The bond is issued monthly by the federal government through the DMO via an offer of subscription at an interest rate based on the market rates. The interest rates are announced by the DMO on the first day of each month. 2. The bond earns on investor a coupon or an interest income that is paid quarterly and directly into the investor's bank account. Notably, the interest rate for January 2025 auction was 17.235% for the 2-year bond and 18.235% for the 3-year bond. The coupon or interest income from the savings bond is tax-free. 3. The bond is tailored towards encouraging a savings culture. Therefore, the minimum investment amount is as low as 5,000 naira, while the maximum amount is 50 million naira. 4. The bond can be sold before maturity through the Nigerian Exchange Limited retail bonds market by authorizing your stockbroker to sell your investment in the secondary market. 5. There are no transaction costs incurred in buying the savings bond in the primary market. However, charges are applicable for investors when buying or selling a savings bond in the secondary market. 6. Savings bonds are low-risk investments. This implies you're unlikely to lose any money, as the probability of the federal government of Nigeria defaulting on its savings bond obligations is extremely low. The bond is acceptable as collateral for loans. Here are the differences between federal government savings bonds and federal government bonds. The minimum investment for bond auction for the federal government savings bond is 5,000 naira, and for the federal government bonds is 50 million naira. The interest payment for federal government savings bond is received every 3 months, while for the federal government bonds, it's received every 6 months. The tenure issued for the federal government savings bonds is 2 and 3 years, while for the federal government bonds, it's above 3 years. The frequency of issuance for the federal government savings bond, it opens for 5 days monthly, while for the federal government bonds, it opens for 1 day monthly. Both instruments are backed by the full faith and credit of the federal government of Nigeria, hence have minimal risk. The table highlights the advantages of federal government savings bonds over the main federal government bonds. How does federal government savings bonds work? You will be required to complete and submit a subscription form through a stockbroker. However, a Central Securities Clearing System account will be needed to be opened for you by your stockbroker, where the bond will be deposited. You can use your stock CSCS account if you already invest in stocks in Nigeria. The CSCS is the custodian and transfer agent that assists with the holding of your investments and transmits or updates your bank details to the CBN. The CBN is the registrar to the savings bond, with the responsibility to ensure interest and principal are paid as and when due. As a result, it is mandatory to have a bank account. If you invest 100,000 naira in 3 years federal government savings bond at an interest rate of 17% per annum, you will be paid 4,250 naira every 3 months for the next 3 years directly into your bank account. That is, you will receive 4,250 naira for 12 quarters, translating to a total interest of 51,000 naira. You will be repaid your 100,000 naira with the final 4,250 naira interest at the end of the year. Please note that you can sell before maturity at the prevailing price through your stockbroker, but it is always advisable to hold for the period of the bond. Now, how to build and compound your portfolio with federal government savings bond. You can set a target to purchase a certain amount monthly, for instance, 10,000 naira monthly for the next 5 years at an average interest rate of 17%. Your total savings will be 600,000 naira with an estimated interest of 342,853 naira 17 kobo, translating to a total of 952,853 naira and 17 kobo. If your monthly target is 50,000 naira or 100,000 naira, your total estimated investment value will be 4,764,265 naira 85 kobo or 9,528,531 naira 71 kobo respectively. This assumes that you reinvest any interest paid or principal at maturity in addition to your monthly contribution. Investments can only be made in a multiple of 1,000. As a result, you are advised to have a dedicated bank account for this purchase and not your regular bank account. As always emphasized, inaction can leave you in a precarious financial state as inflation steadily erodes the value of your hard-earned cash. The current economic climate in Nigeria is especially daunting, with inflation soaring to a staggering 34.8% as of December 2024. However, by investing in savings bonds, you can take a bold step towards safeguarding your financial future. This bond offers a valuable shield, reducing the inflationary impacts by an impressive average of 17% per annum. This means that even amidst the turmoil of rising prices, your money can actively work for you, growing and thriving rather than diminishing in value. Investing in savings bonds is not just a precaution, it's a strategic move that empowers you to confidently navigate the storm of inflation. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.